Hi everyone, Assalamu alaikum. My name is Asad and I work for a small startup called Aspire. Just by a raise of hands, how many startup founders are sitting in this room right now? Great. Anybody who has heard of Aspire before? Okay, wonderful. So I think the last 3-4 sessions, we have heard some really brilliant ideas centered around AI, Gen AI, whether it's hospitality, it's agri-tech, or just building co-pilots. So I'm here to talk about how these brilliant businesses, they all need money to grow and scale, and what has happened over the last 12 months and what's going to happen over the next 12 months. All right, something quick introduction about me, why I'm here talking about this. As I said, I'm a commercial leader at Aspire. I lead the partnership function for the business. I've spent the last 12, 13 years basically leading commercial strategy and business development teams across some of the large tech companies. You can see some of the logos there. And I am an active angel investor. I'm based in Singapore, so I do quite a lot of investments, mainly in Southeast Asia. I've done a couple of investments in Europe. And I'm part of a investors club, what we call XA Network, which is essentially an angel investment syndicate of sort, which is run by the tech execs. Next slide, please. And I work for this company, Aspire. We're basically a Series C startup. We're 6 years old. We are backed by Sequoia. We were a Y Combinator startup. And I think we can pass through that, but essentially, we provide B2B digital banking, payments, and essentially all the financial management services. Next slide. Right. So what happened in 2023, or what's been happening over the last couple of years, actually? The venture investments have continued to decline post their high during the pandemic era. So as you can see the chart on the top, these are the total venture investments by different stages of businesses, pretty much over the last 10 years. So as you guys can see, 2021, right in the middle of COVID, that's where we hit the peak, and since then it's been declining. And if you look at the number of deals which have been funded, they have declined significantly as well. Why was that? Essentially, we'll talk about that, but just to zoom in a little bit, in 2021, across Asia Pacific, the total venture investments totaled around 188 billion. That's a very large number. In 2023, it went down to less than 80 billion. The deal volume also went down about 34%. And something which is quite interesting is the biggest decline came from late stage and technical growth investments. Right, so sorry, I'm going to need you to, there's some animation in this slide, so if you can just carry on till all this, for the sake of time. Okay, so why did it happen? I think there were a couple of reasons. The macroeconomic situation was pretty dim. The world was very unpredictable. The geopolitical uncertainty was everywhere, whether it was Russia or Ukraine war. It was tension between US and China. And more recently, the war in the Middle East. I'm sure some of you have heard about that. What that led to was a very high inflation and high interest rate environment. So money became really expensive. But there were also some reasons. Essentially, that was internal to a lot of startups, and maybe those of you who are founders can actually relate to it. A lot of early stage startups started focusing on growth for the sake of growth. Not to build something big, but just to get the high level revenue numbers, user numbers. They sacrificed profitability for the sake of scale. And lastly, the financial management wasn't that good. Next slide, please. So I'm going to zoom in a little bit more on the last piece, which was the financial management. The first part was the founders actually focused very much on the inward cash flow. You see, like for a scalable business, you need to have money coming in. Of course, we need that. But what the founders were doing was they were solely focused on fundraising rather than actually spending a lot more time on getting the fundamentals of the business right. Another thing, what they were focusing on or not focusing on was actually looking at their cost structures. So they weren't able to predict their costs very accurately. The financial management processes, they were very outdated. I'm sure everybody here has used Excel. We use it every single day. But Excel is not a good enough tool to build your financial management on. The founders actually started looking at easy to measure metrics, top level metrics, revenue growth, gross profit, net income. They didn't bother to go a level down. They didn't look at the ratios. They didn't pay attention to the ROIs. They didn't look at the payback periods of every single investment that they were making. Right, so moving on to 2024. So what's going to happen next year? So within the VC community, the term which is being used for 2024 is that everyone is going to be cautiously optimistic. Everyone is expecting the investments with rebound, but we are expecting a very slow rebound. What does that mean is there will be reset of valuations. So what we have seen over the last 9 or 10 months or so, a lot of growth stage businesses, when they're going to raise funds, they're raising a down round. What that means is if they raised money at 100 million valuation previously, now investors are willing to fund them, but they want to fund them at about half the valuation. So there's a slang which is used among the investors. During COVID, there was a lot of dumb money around. People were funding ideas on paper without a product, without customers or anything like that. I'm afraid the time of dumb money is gone. So I'm standing on an AI stage. The last 4 sessions I attended, they were all about AI. So there's a love affair going on with AI these days. Every startup founder, either rightly or wrongly, want to put the word AI, LLMs, Gen AI. So what's going to happen? Is that love affair going to continue? Or we're going to see what happened with Web3, which happened a couple of years back. So I think the real AI businesses are going to raise a lot of money. But if you're just building a co-pilot based on the models built by other people, they are not going to be able to raise money. These solutions are easily made. Anybody can make it. There is no real defense in there. So when you think about building the businesses, especially if you want to raise money for that, you need to focus on deep tech. And a lot of the time, deep tech involves going all the way to the back. And IoT is, I forgot to put IoT here, but IoT is an area which is a lot of, especially growth stage investors are looking at with a lot of interest. And lastly, climate tech. This is something Pakistan sits like, we have seen the floods, we have seen what's happening, and it's a really big issue. So if you guys are building something which can have a true impact, especially around the ESG or climate space, I think there's a very real opportunity to raise money there. And I think what's going to happen is, especially in the Asia Pacific, there is a landscape shift happening right now. China is not the favorite child for investments anymore. China is being replaced by India. A lot of money is moving to India. South Asia is actually being replaced by Southeast Asia. So what I have seen is a lot of money is moving to Bangladesh. A lot of money is moving even to Sri Lanka. Not so much in Pakistan. There's some geopolitical reasons for that. Hopefully we can fix that. But just to sum it up, I think we'll see the investment volume grow, probably by the second half of the year. We'll see the early stage investments grow, but they will be focused on certain topics, and I think there is an opportunity for emerging economies to attract more venture capital. Right, so how we can help? So we basically work with or partner with almost 70% of seed and early stage startups across APAC. So there are quite a lot of Pakistani startups that you might have heard of. I think I was looking at, we have over 250 startups who are our customers and based in Pakistan. We have a very close partnership network, over 100 VCs based across APAC. And we're very actively pushing out best practices on financial management for startups. Most importantly, we manage the largest community of entrepreneurs. And I think it's essentially, entrepreneurship is a long and tough journey. So everybody, we do it together. And yeah, if you guys have any interest in investments in startups or just want to know what Aspire is, what do we do, please come and talk to me. I don't know if I have time for any questions or if there are any questions. Okay. Thank you so much.